Take me home, cause I wanna feel like I belong. They relate to all this pain in my past, so they listen to my song. So let's go back to where it began and where it all started from. Take this chance, one last dance, cause I've been waiting way too long. Take my hand, I wanna show you something. Promise I've been dying to see ya. They say the grass ain't always greener. I guess what they're saying is true. In my dreams, that's where I seen her. Take my heart and take all of me, girl. Let me show you what I wanna do. I wanna spend the rest of my life with you. Are you listening, darling? Look where we started. Breaking in half, left us broken hearted. So where do we go from here? Are you listening, darling? Look where we started. Breaking in half, left us broken hearted. So where do we go from here? Where do we go from here? Yeah, where do we go from here? Are you listening, darling? Are you listening, darling? Are you listening, darling? Look where we started. Breaking in half, left us broken hearted. So where do we go from here?
Hello and welcome back, everybody, to another live stream. So today is Thursday, the 19th of September. And of course, as always, we will run through the Bitcoin technical analysis. We will take a look at what is going on. We will run through what I am currently doing, what I'm looking for, the next trades that I'm looking to take. And yeah, basically what has changed, what's happening now. So yeah, that's what we're going to run through today. If that all does sound interesting, please do smash that thumbs up button. Of course, subscribe if you are new to the channel. And yeah, make sure you turn that bell notification on so that you don't miss any updates. But enough of that. Let's jump into the charts and take a look at what is going on. I've just pulled up the chat as well. I can see Mr. FFS, what a nightmare, is back in the chat. Good to see you here, my friend. Did your short get liquid? So I'm guessing liquidated? No. Yeah, my short trade got stopped out. It didn't get liquidated. I got stopped out at entry, so I can actually show you that, to be honest with you. So I told the team today at 8:40, okay, I said the short is all closed. That's what I told the team this morning. So as you can see here, realized profit on that trade was $649 in a profit. As you can see there, the status of that trade is all closed. So yeah, that got stopped out at entry, right? So you remember after we, where was this short trade entered into? Up here. Here we go. So here, I told the team, taking a small hedge short against the long trade. Okay. Yeah, we took a TP1 on that trade. So yeah, after that big pullback we did see, we took, of course, that TP1 there. And then we did take a TP2 at some point as well, wherever that was. Yeah. That was the long closing here. Just took another TP on the short. There was the TP on the short. So $654 in a profit. And yeah, then today told the team this morning that it was all closed. So $649 in a profit. Yeah, of course, some has been knocked off because of fees, right? We always have to pay our fees, right? So that, of course, has knocked the profit off ever so slightly, but still, very profitable trade, right? I'm happy with that. Yeah, very happy with that trade. Not a huge trade, but yeah, it was a good trade. So yeah, that got stopped out at entry, right? Because like I said, I told the team, stop loss, just move the stop loss to entry on that short trade. Okay, just move the stop loss to entry. So yeah, it was completely risk-free trade. It got stopped out, and yeah, now what am I looking for, right? I'm looking for higher prices. Okay, I'm looking for higher prices here, and pretty much what I told the team, yeah, not even that long ago, right? Yeah. About an hour ago now, we were looking at the naked point of control. So I was telling the team, BTC is testing the naked point of control at 63,775. For me, this is not a level of interest. I'm remaining patient and looking for $65,000, right? So that right there straight to the point. Okay, that's what I'm looking for, right? No BS. Straight to the point. $65,000 is kind of what I'm looking for, right? Yes, we are coming into resistance, and you can see. Okay, for any of you. Like smaller time frame, maybe scalp traders, day traders, then this is of course a great level for a great short trade. Okay, I'm sure it is for me. Okay, well, yeah, I say a great short trade for me. I haven't looked into it. This is not something that I would trade anyway. So yeah, I haven't traded this. I haven't taken a short trade off of this. But okay, for intraday traders, for day traders, for scalp traders, okay, this could have offered the perfect short trade. Why? Well, because it's a level of resistance. It's a naked point of control. It is a level of resistance, okay? And we do tend to see reactions off of these levels, exactly like this one at 63,775, right? We've come up to it. We've tested it for a few 30-minute well, we've tested it for 2 hours, okay? And we are now getting a rejection off of it. Okay, if you wanted to take it seriously, okay, then we're looking at it on the 5-minute, okay, and I can tell you now that yeah, any scalp trader, any day trader that looks at naked points of control would probably have taken this short trade, right? Would probably have taken the short trade. Why? Because it's a simple sweep of liquidity, right, on a level of resistance, i.e. the naked point of control, okay? And we are getting a nice reaction towards the downside, okay? We even actually got a back test of it here, okay? And then a rejection. So for any like scalp traders, intraday traders, this is like the perfect trade setup, right? At the moment, I'm not looking for these small movements, okay? I'm not looking for these. This is not what I'm focusing on. Okay, I'm focusing on more of the swing trades at the moment because price isn't really consolidating in in a confined space, right? Yeah, okay, we zoom out. Okay, we are consolidating, yeah, but it's pretty freeing consolidation, right? What I mean by that is, we're seeing a nice big move down followed by a nice big move up with it's the market is breathing, right? It's not really consolidating in a confined space. Like I said, when we're consolidating in like a really confined area, okay, that's when I kind of adapt, and then I look for those day trades. I look for those not necessarily scalp trades, but intraday day trades. Okay, so yeah, for me right now, it's I'm not looking at trading this. Like I told the team as well, it's not a level of interest for me. Okay, I understand, right? Maybe for you guys, if you're looking at naked points of control, this is a level of interest for you. Maybe you've shorted this level, but for me, it's not. It could possibly turn into. No, I just wouldn't be trading this. I'm still looking for $65,000. Why? Okay, well, because on the analysis that I am looking at, I don't necessarily see anything bearish here. Okay, and what I mean by that is absorption. Okay, I'm not getting any absorption here. What I'm looking at is liquidity. Okay, and I'm looking at a draw to liquidity. I'm looking for price to be drawn to liquidity. Okay, that's what happens a lot of the time, right? So looking for $65,000, of course, we do have that. We do have that possible short trade from $65,000. Thought you were bearish. You're saying these rises are retail just getting wrecked. So yeah, I was previously bearish, but okay, I've had to change my thesis, right? Okay, this, I walked through this yesterday, right? I walked through this yesterday because I understand from people on an outside perspective, okay, they may be looking in and they'll look at me saying, okay, right, I'm bearish here. I'm looking for lower price targets. But what you have to remember is that those price targets can be invalidated, right? We're trading probabilities here. We're not trading certainties, okay? We're trading probabilities, okay? So, like I said to the team as well, like, I never view myself, and this is a really good mindset to get into. I never view myself as being wrong in this market. Okay, maybe you can look at it as, when I take a loss, I was wrong in that decision, but I don't believe I'm wrong in that decision. Why? Because it goes back to what is trading. It's a game of probabilities. Okay, probabilities, not certainties, right? So you're gonna be wrong at some point. Okay, and the mindset that you have to get into is that it's not being wrong. Okay, so like you said, yeah, okay, I was bearish, and it's not I don't feel like I was wrong to be bearish. Why? Because I know what the trend has been, and I've made a lot of profits from trading the trend, which is bullish structure for the short trade to bearish structure for a new low. Bullish structure for the short trade, okay, for bearish structure for a new low. Bullish structure for the short trade, bearish structure for the new low. Bullish structure, short trade, okay, bearish structure, new low. That was the trend. So that was the analysis that I was going off, right? Again, it's probabilities, okay? It happens, right? 1, 2, 3 times before, okay? It happened 3 times before. This was the trend, okay? Trade the trend until the end because the trend is your friend, right? I was looking for it here. I had the short trade in, okay? It was a very profitable short trade though. Okay, it was a very profitable short trade. Yes, I was bearish and I was looking for lower prices. Okay, but what did I do? I locked in the TP1, I locked in the TP2, and then I move that stop loss to entry. So it's risk free. So, I can't really be wrong, okay, because it's already a profitable trade. Like I showed you, $650 in a profit on that trade, okay. You can't be wrong in that scenario when you've taken a TP1, taken a TP2, moved the stop loss to entry. There's no way that you can be wrong. And then, of course, right, like I was saying, right, we were in this bearish structure, so I can look for lower price targets, yes, right? But, what changed, right? What changed that we hadn't done before, okay? Well, we broke this bearish structure to bullish structure, right? We've broken that to bullish structure. So now what does that do? Does it mean I'm wrong? I don't look at it that way. I don't look at it as me being wrong. I look at this as, okay, that price target has now been invalidated. Let's analyze the markets again and let's look for the next target, okay, the next target, right? Of course, there was the long trade from down here. Again, like I explained, I haven't taken that long trade. This happened late on the Friday, okay? So, well, not last Friday, the Friday before. Okay, so yeah, about 2 weeks ago now, I didn't get that long trade in. The reason why is because I was asleep. It happened late on a Friday. I'm not one for going out. I'm not one for late nights, right? So yeah, going out on late nights out, right? So I was in bed at this time, right? And unfortunately, we did get the long trade set up. Woke up in the morning and we had a nice rise towards the upside. Okay, so yeah, unfortunately, I'm only human. I do miss trades here and there because I do have to sleep at some point, right? So that was the long trade that, again, we were talking about this long trade as well. We had huge absorption coming in. We had a really nice naked point of control lining up with a GP786. We were talking about this level. And if you guys listened, of course, then you may have taken the trade yourselves, right? I was literally talking about that. I was telling you guys what I want to see and what I'm looking for to get that long trade. But yeah, unfortunately, I didn't get it myself. We see this really, really nice rise towards the upside, okay? And again, right, doing that, we've broken the bearish structure, which, like I said, we haven't done that before, okay? In this of course, we've done it before, but I'm talking about in this trend, right? We haven't broken the bearish structure before, okay? Now we have, and what is price doing? Okay, we're reversing in the opposite direction. Okay, and all we can do, okay, is remain patient, right? Of course, there was the long trade from here. Didn't manage to get that. If you did manage to get the long trade, then great. Okay, you just ride that long trade out. Okay, it's doing great. Take a TP1, take a TP2, move the stop loss to entry. Risk-free trade, you cannot be wrong, right? But now, right, the market has shifted, right? We're not looking bearish anymore. Okay, well, I still think we're looking bearish on the larger time frame. Okay, that's not invalidated for me yet, right? But locally, right, we're looking bullish. We're looking for higher prices here. Okay, we've come into resistance, right? We've already come into resistance. Okay, I can't remember what the levels were. I've deleted the naked points of control off the chart now. Actually, I do remember 60,000. 150, I think it was. That was one of them. We just smashed through that resistance, right? We smashed through that resistance. We're now coming into more resistance with 63,775. Okay. Yeah, okay, you can argue a short trade from here. I'm not looking for a short trade. It's not what I'm looking for. So yeah, I'm looking for $65,000 now. Okay, again, I'm looking at probabilities. I'm not looking at certainties, right? I try to say this. I try to say this a lot, right? I don't really like giving price targets, and the reason why is because there is a lot of bad stigma around price targets because of these big people with big followings saying, "Oh, this is the price target, $120,000." Okay, and that they're kind of putting it in a way to you that it's a certainty we're going to see that price target, and it gets everybody very, very excited, right? And that, of course, is only going to benefit them because they're positioned in a very good way, and then of course they have a very large following as well. So of course they do have a slight, a slight interaction with the market, right? But for me, it's like, okay, I have levels. They're not really levels. They're kind of zones. Okay. And I'm looking at this as what's the highest probability move. Okay. Again, it's all probabilities. It's all down to probabilities. So I'm looking for the highest probability move at this moment in time, right? When we broke this bearish structure here, okay, when we broke this bearish structure on this move up, okay, the highest probability move now, okay, from that point was not $48,900. Okay, it was $65,000, right? It changed. The market changed. It invalidated that lower price target. Okay, so now we're looking for $65,000. That's what I believe now is going to be the highest probability highest probability level. Okay, or highest probability zone. Okay, so I'm just looking at probabilities, right? Yes, okay, I can be bearish one day. Again, I always try to remain level-headed and kind of like neutral in the market, but I am going to favor one side than the other at certain times, right? Exactly like here. I was favoring the downside. Why? Because it was the trend. It's what was going on. Okay, yes, we started to show some signs of bullishness down here. We got the reversal, and I understand we got the news coming in as well, which of course was good for the market, right? We've pushed higher. Okay, great, right? But in this period here, right, you could not have expected, right, this to happen. Okay, of course, right? Again, even when I'm entering into a trade, I don't expect that to happen. I understand, right, that there's a high probability that is going to happen. I don't expect it, right? I never expect anything to play out in my favor in these markets, okay? But I understand probabilities and moves, okay? And now I understand, okay, highest probability move is probably $65,000. We may not get there, okay? We may just dump from here. That's a possibility, right? But I know that the highest probability move, or the highest probability, move towards the move is towards $65,000. Okay, so again, it's just down to probabilities, right? So locally looking for $65,000, where of course that is a major level for me. I get that, but I was only it was only last week you were looking for sub 50k Bitcoin. Yeah, because that was where, right? That was where we were heading to. Okay, look, where did we come down to, right? We came down to $52,000. Okay, we were at $52,000. What is a $2,500 move towards the downside? It's absolutely nothing on Bitcoin. Absolutely nothing, right? So we were close to that, okay? But of course, we had a bit of a shift. Like Damien said in the Discord as well, we had lots of confluence down there. Where are we? Because Damien was looking at this bullish it was this one, wasn't it? So yeah, Damien was looking at some really nice confluence down here. We got this really nice level after tapping that level that he was looking at perfectly, about $52,300 roughly, from what I can see here. And then of course we had naked points of control. We had absorption here, right? Yeah, there was strong confluence for a long trade down here. I unfortunately just didn't manage to get that. Okay, I was it's like, this long trade, even if I entered into this long trade here and I was looking for higher prices, okay, I still would have taken a TP1 early on that, moved the stop loss to entry, okay, because I understood, okay, that even on this move towards the upside, the highest probability move still for me was lower. It still was until we broke, I was saying this as well, until we broke the bearish structure, okay, we can still look for lower prices, right? It's just probabilities. Why? Because I've shown this so many times, right? It played out here perfectly. Okay, it played out here perfectly, right? It played out here perfectly. It played out 3 times perfectly, right? looking for it to play out for the fourth time. If it doesn't play out, fine. Okay, it's a game of probabilities. That's all it is. Okay, you can't. For me, right? You can never, ever, ever have a price target and stick to that price target. This is how a lot of people get wrecked in the markets as well. If you have a price target of, let's say, $70,000, okay, and price is coming down to 50,000, 40,000, 30, and you still have that price target of $70,000, you're just going to get wrecked and wrecked and wrecked and wrecked and wrecked. Okay, you have to be able to adapt to what the markets are doing. I say this a lot. Do not expect the markets to adapt to you. You need to try and adapt to the markets. Okay, again, here, right? I understood after breaking this bearish structure to bullish structure, I understood, okay, I'm adapting to the markets. We now look for higher prices here. Okay, we now look for higher prices. Okay, you have to be able to adapt to the markets. I will never have a price target and stick to that price target if something changes in the markets. The markets are always moving. The markets are never sleeping. The Bitcoin markets, anyway. Okay, the Bitcoin markets are never ever sleeping. There's always something going on. Okay, always something going on. Even if it's boring, there is still always something going on. Okay, and things can change very, very quickly. Okay, very, very quickly. And you need to be able to adapt to that. You can't have, yeah, okay, I was looking for sub 50K, right? What? It was the probabilities, right? And, you know, if you're not gonna, if you see something different, right? If you see something bullish like we did here, then you can adapt to it. Okay, then you can then you adapt, and then you think, okay, right, we're showing some signs of strength here. We've then broken the bearish structure. Okay, and now this for me is actually looking quite quite bullish. Okay, so now from here, like I'm thinking to myself, okay, higher prices are coming here, right? Higher prices are coming here rather than lower prices. Why? Okay, because it's probabilities, right? You know, it's probabilities. When I'm saying price is bearish, the probabilities are favoring the downside. When I'm saying price is bullish, all it is probabilities are favoring upside. Okay, it's not like, you know, it's not like you can expect price to move up. Okay, you know, initially, yeah, even if I'm bullish, we tend to see price actually rise. Okay, maybe it doesn't rise to where I'm looking for it to go. Okay, exactly like here, right? The pullback, I was looking for it to go to sub 50K, right? But things changed, right? So things change in the market, and you've got to be able to adapt. The difference now is FOMC rate cuts yesterday. Yeah, okay, this is a whole different dynamic on the market. For me personally, I don't really care about the rate cuts. I have no care in the markets. Again, I'm a trader. I'm not, I'm not a news analyst, right? I trade the technicals. That is all I will ever trade. I'm aware of certain news events. I'm aware of rate cuts. I'm aware of what what happens in the FOMC meetings. Okay, I do have a little skim read of the summary of what happened. Okay, I never watch it. Right, maybe I'll have a little skim read of what happens. Right, I just don't really care. Why? Because I take myself back to 2 years ago, right, when I was consistently losing money in these markets, right, and a lot of money. I didn't know what I was doing. I was consistently losing money. What was I doing, right? Well, I was looking at news. Okay, news was affecting my trades. I was looking at, I was looking at other big influencers as well. They were affecting my trades in a negative way, right? News was a big one as well, right? FOMC, that was another big one as well. All these data releases that come out, those were also negatively affecting my trades. Okay, and it was, of course, right, maybe for you it works, right, trading FOMC and trading these news events, right? But what I found works for me is ignoring all of that and sticking to the analysis, to the technical analysis. It's what works for me, right? That's it. So I don't care what's going on in the markets with FOMC, with the rate cuts. I don't care. I understand. Okay, yeah, this is good for the markets, right? It is good for the markets. But we'll have to see how it plays out, right? We'll have to see how it plays out, because ultimately, right, what are the sheep going to be doing now? Okay, all of the sheep are going to be long, right? And again, when everybody is feeling the same thing and is thinking the same thing and is doing the same thing, the majority of the time, the market does the opposite. Okay, maybe not, maybe not the complete opposite. And when I say that, like that we get we get a bear market, right? Everybody thinks we're in a bull market and then we go straight to a bear market. No, not like that. Okay, it's more along the lines of, okay, right, everybody's long. Okay, we get up to here, right? We form millions upon millions of trap traders up here. Price starts to pull back. Okay, we get a big pullback. And what we do, okay, is we wreck all of those long trades. Not necessarily, okay, starting the bear market. That's not what I mean, right? It's, okay, we're going to wreck all of those long trades that opened up, right? And let's just have a little look at. Let's have a little look at. Yeah, so we're still getting a lot of long trades opening up, right? You can see we've got shorts getting wrecked. We've got longs coming in. Okay, we've still got longs coming in. We've had quite a fair few longs open up on this move towards the upside, but it has also been fueled by some shorts opening up as well. Not necessarily, right, the shorts that opened up here, because we didn't see that many shorts open up here, but we have actually started to see quite a few shorts open up on this move towards the upside here, which is a little bit odd, to be honest with you. I guess, retail traders being retail traders, right? But this is not something I would really expect them to be shorting, to be honest with you. But there we go. Yeah, we have seen some shorts, not a huge amount, but we have seen some shorts in open up. So this is kind of a bit of a mix between like longs opening up and a little bit of a short squeeze as well. This move towards the upside, it's not the best move up. It's not the best. The reason why I say it is because the open interest hasn't increased significantly. It's kind of just like slowly building over time. But again, look at all of that absorption that's occurring, right? Look at all of that absorption, right, that we're seeing on each one of these pullbacks, right? For me, this is very bullish, and I just don't see I don't see a reason for it to stop at this moment in time, right? I would be looking towards, again, $65,000, and that's where, of course, I'm looking for that next possible short trade. I see so many Damien, good to see you back, my friend. I see so many comments like this this time, guys. You need order flow when trades happens right now. We have bullish open interest, positive delta, increasing CVD, just bullish. Yeah. I mean, it's sorry, here. Yeah, it is looking good, right? It's not the best rise towards the upside, but it's a good rise. We're increasing in we've got positive delta building, we've got open interest increasing. Again, it's not increasing massively. Like I can't really show a great example. I guess this is a good example. I know that this move up here that you can't see here was actually a better example of it, but this is an okay example. So price started down at $48,900, ended at $65,000, right? Open interest started at 726 million, okay, and ended at 970 million, right? So on this move up, open interest increased from 730 million, okay, all the way up to 970. So that was an open interest increase, right? At the same time, you can see on the CVD, right, it's running like the running total of delta, right? We can see that this started at 399 million and ended up at 200 million. Okay, but we're in the minus here, so that is an increase, right? It doesn't look like an increase, but this is minus 400 million. Okay, and we're at minus 200 million. Okay, so yeah, go back to your primary school maths, right? When you're in the minuses, okay, a decrease is actually that was an increase in delta. Okay, and open interest is increasing. So this is a good move up because this is fueled by new longs opening up, right? That's what we want to see for a good move up here. Okay, again, it's not the best, right? We are getting delta building. Okay, we are getting delta building. Open interest is increasing. I would like to see more delta, more positive delta, and a bit of more of an increase in open interest, but it's fine. It's still a decent move up. It is still a decent move up. Join the Discord for the mega info. You see our magic. Yeah, exactly. Yeah. Thank you for that, Damien. You need to plan everything as a trader. Literally, yeah, you need to plan everything ahead. Literally everything ahead. And just going back to this, Damien's been putting a lot of good stuff in that Discord as well recently. I'm always reading through it. I need to actually read through the stock market one. I haven't looked at that yet. But yeah, always reading through this and looking at his analysis. He's always got some really good analysis, and it's not necessarily things that I look at, and I quite like that because it just adds confidence. And then at the same time, it's also really nice to see when his analysis is lining up with my analysis. Because again, it's not like we're looking at the exact same things. Like here, for example, Damien likes to look at Gartley's, bearish sharks, and all of that good stuff, right? And this is not something that I necessarily look at. I'm aware of them, but I don't really use them for my analysis, right? But it's nice to see Damien here using those, but at the same time, those also lining up with the analysis that I'm looking at as well. So that's always really, really nice to see. Stock market all-time highs, just follow your plan and trust it, literally. Stock market is making new all-time highs. Again, with the stock market making all-time highs, yeah, we can expect Bitcoin to follow it, but we just have to be a little, and we are following it. But I always just remain a little bit skeptical, or not skeptical, like just a little bit, just prepared, right? Because sometimes we just see the stock market pump and Bitcoin doesn't follow it. But when we see the stock market dump, we see Bitcoin follow it all the time. I just find it quite weird. So that's always something to just be aware of, right? But at the moment, we're following it. Great. Okay, it's really, really good. We're following it, which is nice. Bullish shark at 65 is the level, very strong to complete the shark. $65,000, amazing target. I think that's, my mouse is deciding to play up again. I don't actually think it's my mouse. I've had this problem for quite some time. I don't think it's my mouse. I think it's my mouse pad. My mouse pad is a little bit beat up. I think it's the mouse pad that I need to get a new one of. So that was 63. So here, was it this one? Yeah, it was this one here, I believe. Yeah, so that lines up with, of course, that POC of the fixed range. So let's pull up this as well. It's a good thing to pull up because it's just more confluence for resistance, right? Yeah, so we've got those naked points of control, of course, up there. Okay, just above $65,000, which I would look for them to be tapped. Maybe not all of them, okay, but maybe at least the one at 66,325. Okay, for then a bit of a pullback there. Maybe the short trade. Okay, maybe the short trade from there. That's the plan, right? But yeah, we've got that. We've also got that POC there as well, which of course is going to be strong resistance. So that's something to be aware of as well. The clue at 52,800 was bullish CVD, like AJ said. Without order flow, you can't tell. Yeah, literally. Without order flow, like you could. Yeah, that's a perfect way to put it, Damien. Thank you for putting it like that. That's a perfect way. Without order flow, you can't. There's no way to determine whether this is bullish here. Okay, there is no way to determine. Okay, right, maybe you could pull up the RSI. Again, I do not look at the RSI. I don't hate it. I just don't find it useful for me. There you go. You weren't even seeing any bullish signs on the RSI. I was kind of hoping for that. I was actually kind of hoping for that. But yeah, there you go. Even if you looked at the RSI, you couldn't have known that Bitcoin was bullish down here. You couldn't have known. Only order flow can tell you that. Only order flow. That was actually really, really interesting to see. I was thinking that there was going to be one of the so-called bullish divergences on the RSI, but there wasn't. There absolutely was not. Now what are you getting here? You're getting a bearish divergence, whatever it is, hidden, or I don't know. I only look at one thing, and that's a bullish divergence or a bearish divergence on the CVD. And from my understanding, I've kind of forgotten about this because I don't look at it anymore. So the bullish CVD and the bearish CVD that I look at is actually classed as hidden bullish and hidden bearish when these retail traders are looking at RSI. But in order flow terms, bullish CVD is bullish CVD, bearish CVD is bearish CVD. Okay, on the RSI nonsense, I don't know anymore. So I know you got the hidden bullish. Yeah, all sorts of varieties of it, and I don't really care. But yeah, really nice to see. Even on the RSI, you couldn't have known that Bitcoin was bullish down here. Yeah, so thank you for bringing that up, Damien. That was something that I didn't even realize myself. Yeah, you couldn't even inverse head and shoulders. So yeah, I guess you can be looking at this as an inverse head and shoulders here. Personally, for me, I don't look at this. I don't trade this. I don't really care about this. And to be perfectly honest, this makes me believe that we're going to see a pullback here. Okay, because everybody's going to be looking at this as a inverse head and shoulders. Everyone's going to get very, very bullish. Okay, we're then going to form trap long trades up here who have to cover. Okay, meaning they're selling into the market, and then that domino effect that I talk about all of the time, and then that huge long squeezing out all of those long trades. So that's how I would look at this type of head and shoulders. Bart Simpson, Bart Simpson. I quite like the Bart Simpson pattern. It's a bit of a joke, isn't it? But I do actually, because it does a lot of the time play out. That is one of the patterns, one of like the retail trading patterns that I would look at and say, okay, right, that actually does play out quite a lot of the time. Again, I haven't built statistics on it. I don't trade it, but it's just something that I've seen over time. Like I've just seen it actually kind of play out quite a few times, which is quite interesting to see. But again, it's not something I trade. It's not something I would probably look at trading. But the thing is, I probably trade it anyway without even thinking about it. Like here, you look at this and I guess you could call that a Bart Simpson pattern. There, and again, the short trade was from there that we had. Okay, so we shorted that down. So you could say, yeah, I traded the Bart Simpson pattern, but I wasn't aware that it was a Bart Simpson pattern. But yeah, that's the only retail trading pattern that I think of. And I'm like, okay, right, that actually does play out a lot of the time. When longs and open interest is that low, you know what's coming. Later breakout traders getting trapped at 70k or higher. Liquidity looks good at 67k. Just keep an eye for the order flow and you get a mega trade. So for me, looking at it, it's like, we're not seeing a huge amount of long trades opening up here. We're not seeing, because we're not seeing that huge amount of, we're seeing positive delta, but we're not seeing a huge amount of positive delta. We're seeing an increase of open interest, but we're not seeing a huge increase of open interest. So it's a good move up, but it's not a great move up, right? It's not what you really want to see for a really, really bullish move. But yeah, it maybe means that the long trades are waiting for a little bit higher to then long, which ultimately is bad news on their end, because what it could, again, just be lining up for, and kind of like pretty much what Damien has just said here, right? They're going to be longing, right? And when they finally do long, because we know that those longs are going to come in, when they finally do, it's going to be too late, right? It could be between 65 and 67,000, or it could be at $70,000 to $71,000. Okay, it could be in either one of those regions, and I don't care where it happens. Okay, but I know it's probably going to happen at one of those levels, and then those longs are going to come in, and then price is probably going to pull back, and we're going to see lots of trap trading at one of these levels. I would expect that. I would. Is it definite? No. Okay, I just would expect it. It's something that I would expect because it happens time and time again. So definitely, right? Liquidity looks good at the 67k. Just keep an eye. Yeah, literally what Damien said. Keep an eye on the order flow. That's literally what we have to be doing, right? Let's see. Okay, let's see what these retailers or traders are doing. Okay, right now, we're seeing them long, not massively. We're not seeing a huge amount. It's like if you view it as a field of sheep, right? And then you've got the farmer trying to move all the sheep from one field to the next field so that they can eat all the grass over there. And the first lot of the sheep have gone through to the field, but the rest of them haven't followed. They will follow at some point, but they haven't followed yet. So yeah, that's kind of what's happening now. We're seeing the longs coming in, but just not a huge amount of them. And then we're going to see, of course, the farmer push the rest of the sheep through the fence to the next field, and that's where you would see all of the. Well, I say all of the, like a huge amount of longs opening up. But yeah, I guess in this instance, you can look at retail traders being a little bit fearful at this moment in time, a little bit skeptical about entering into trades, because just remember how many long trades have got wrecked on each of these moves down. Okay, remember, right? These moves down weren't fueled by shorts opening up. Okay, yes, some shorts opened up, but the main driver for each one of these moves down was longs getting wrecked. So what we have to understand is that all of these retail traders, all of these sheep are longing the move up, getting wrecked on the move down, longing the move up, getting wrecked on the move down, longing the move up, getting wrecked on the move down, longing the move up, getting wrecked on the move down. If that happens to them time and time and time again, okay, they never learn, yes, right? But at some point, they have to run out of money. At some point, they have to say to themselves, right, I can't keep doing this because I'm getting absolutely destroyed here, okay? And that's probably what's going on here, right? We're not seeing a huge amount of longs opening up because they've probably run out of money, or they've finally come to terms with, this is not making me money, this is only losing me money. So, maybe that's kind of what we're seeing here. I don't know. I don't really know. I don't really care. I'm waiting for my key levels to trade, of course, right? That's a level of understanding of the markets that you don't have to have. You don't have to understand why we're not seeing traders come in here. It doesn't matter. Let's just look at the order flow, look for the traders. That's it, right? So yeah, for me, again, it's like that is patience, right? Patience from here. I would love to have been in that long trade. It would have been absolutely amazing. But yeah, it's fine, right? It's absolutely fine. I know that there's going to be thousands of trades in the future. And again, first of all, we have the $65,000 level. We're rejecting at the naked point of control at 63,775, but I would kind of still expect us to push through this. I don't see anything bearish. The only bit of bearishness you could say is resistance, and it's not enough for a trend reversal, in my opinion. Again, it's probabilities, right? Probabilities. There's only, right, if it was on a scale of 1 to 10, I would say it's 1 out of 10 being bearish right now and 9 out of 1 being bullish. Okay, that's how I would score it, just to put it simply, because yeah, there's only one bit of weakness that I see, which is resistance. Okay, yes, we could see a bit of a rejection from here, right? Fine. Okay, we have a naked point of control below us. Maybe we find support there, then we come back up. That's what we could see. So a temporary pullback here is not something I see as a complete trend reversal. It could be, but I don't see it as that. And again, I only look for the highest probability trade setups. This here, not a high probability trade setup, high probability short trade. Why? Because there's only one bit of confluence, right, which is resistance, and it's not really much confluence. Yeah, you couldn't even call it. I'd call it half confluence. Why? Because I have to pair confluences together for it to be a singular confluence, if that makes sense, right? Again, fib levels, okay, GPs and 786s. I look at that, and it's not one bit of confluence, okay, unless it's paired with absorption. Then okay, those paired together, it's 2 bits of confluences, okay, but because they're paired to, I'm probably explaining it stupidly, but yeah, it makes them both one, so it's 2 bits of confluence, right? Because just using the GP786, it's not enough for me. It's not enough confluence. It has to be paired with something for it to mean something. That's how I should probably say it. It has to be paired with something to mean something. Yeah, okay, you can look at a GP786. It doesn't mean anything to me unless it's paired with something, which is, of course, the absorption. And it's kind of the same with a naked point of control. It means absolutely diddly squat to me, as Jeremy Clarkson would say. It means absolutely nonsense to me, a naked point of control, unless there's confluence there. So yeah, this naked point of control, it doesn't mean diddly squat to me. It's just nonsense, right? The only ones that I really pay attention to, of course, is like 66,325, 67,300. Why? Because there's confluence. They're close together, first of all. There is, a POC there, but at the same time, we can reject off of that. We can get a trade entry trigger for a short trade, and we can see a bigger pullback. Yeah, that's for me confluence, right? There's a reason for price to pull back. Here, I don't really see reasoning for price to pull back. Okay, yeah, it can pull back, but I would still expect to see $65,000. We'll see, right? If we lose the daily, then we will have a good short trade, but we are so far away. Do you mean a daily level? Yeah, do you mean a daily level or a daily naked point of control there, Damien? I mean, like $60,400. Again, like if we lose that, I don't really. It's not something. Again, it's not something I trade. But yeah, I'd be viewing it as more of, okay, right, if we lost the bullish market structure, that's where I'd be looking for lower. It's all about position sizes as the traders weigh the probabilities of the outcome, in your favor. The more confluence, the more you can put on the table as the odds are in your favor. Yeah, again, like that's, yeah, really good way to put it. Again, like it doesn't, just to add on to that, right? It doesn't give you an excuse to over leverage yourself and over position yourself. There's something that you should never ever do. Like with me, I have position sizes, but those are comfortable position sizes. I have, when I say like a high position size, it's just like a regular position size, right? It's just like my regular high probability trade setup entry. Okay, then of course, like if the probabilities, or if it's a hedged trade or something, okay, I'll enter in with lower capital. But yeah, I never ever, even if I see 10 bits of confluence and the probabilities of price increasing is so high, I still would not over leverage myself or over position myself. It's yeah, again, position sizing is very important. Traders forget 95% or more won't be profitable long term. Exactly, yeah, and that's exactly what the idea that I go off of, right? It's kind of, yeah, the black sheep method, right? Because and it's really it's tough to trade this way. And I know that because I've been through it. Now it's easy, but it is tough to start trading this way. Why? Because you're doing the opposite of what you've done before, okay, and what you've always done and what you've always known, and you're also doing the opposite of what all these big successful influencers are doing, right? But what you have to understand, right, that they could not care less if they get liquidated from the trade. I see some of these big influencers, a big one, who I will hold my hands up and I say I used to watch them. I used to watch them when I was younger. Must have been over 2 years now, over 2 years ago now. What's his name now? I literally watched a video of him the other day. Crowlow, Thomas Crowlow. Yeah, I think that's how you say his name, Thomas Crowlow. So I popped up a video of his the other day. I just bored, wanted something to watch. was scrolling on YouTube. One of his videos comes up. I'm still subscribed from him from like 2 years ago, and I look at one of the trades that he's in, and he has $250,000 in a loss unrealized, and then he has $250,000 in a loss which is realized. Okay, so we've got $500,000 in a loss. Okay, $500,000 in a loss. Okay, right. Maybe that aligns with his risk management. Okay, maybe he's so rich that risking $500,000 is nothing to him. Right. That's how you have to see it. Okay, it's nothing. He doesn't care if he loses that money. Okay, but that is a heck of a loss. That is even if I got to a status of $1 billion, I do not think I would risk $500,000. I just don't. It's just absurd to me. Okay, right, maybe that's within his means, right? But I look at on about Carl the Moon. No, Thomas Crowlow. Thomas Crowler, I think it is. Carl the Moon. I haven't actually watched one of his videos in quite a long time, but yeah, Thomas Crowler. Maybe I'm saying Crowler wrong. I'm not too sure, but yeah, $500,000 in a loss. I'm like doing the maths in my head as well of like how rich he is. I don't know how rich he is, but you know, I think even as a billionaire, I don't think you can risk $500,000 on a trade. I just don't think that, in my head anyway, just because I understand risk management, I don't think that really logistically works in my head, right? Risking $500,000, it's just stupid, right? But going back to it, right? You're looking at all of these people, and you're looking at Thomas Crowler, who's risking more than $500,000 on this trade. Okay, and that just fills you up with so much confidence. Why? Because he's got over $500,000 on the line, right? So that fills you up with so much confidence, okay, and fills you up with confidence that he is right and he is going to, come out on top. Okay, yeah, okay, maybe he's going to come out on top after his trade goes to $1 million in a loss. Right. And then, okay, maybe at some point it goes into a profit. Right. But it's not a realistic way of trading. It's really not a realistic way of trading at all. So, yeah, again, like looking at order flow and entering into trades off of order flow, you're the black sheep of the herd. Right. You're doing what everybody else isn't doing. You're doing the opposite of what everybody else is doing. Why? Because you understand, right, that the sheep, okay, do the same thing every single time, okay, and their lives stay the same. They eat the same grass, okay, they do the same things, they mare the same mare, right? They don't go anywhere, okay, they don't go anywhere. And if anything, they go down, right? Now, being that black sheep and trading in the inverse way of the sheep, okay, is, of course, the way to go about it. Why? Because like Damien said here, 95% of traders aren't profitable in the long term, right? And you can add on to that as well that 95% of the time, 90 to 95% of the time, traders, okay, retail traders lose money, right? And these are statistics that you can find online as well, okay? So if you're doing the opposite of what they are doing, yeah, you have a much, much higher chance of becoming successful, right? And I say only a much higher chance. I only say you have a higher chance because, of course, you still have to put the work in. You still have to understand the analysis. Just because you do the opposite of them doesn't mean that you're instantly going to be successful. No, okay. You have to choose the right tools to use. You have to look at the right things. You have to understand certain things, okay? And then it will all gel together, and it will all work, right? But yeah. These big influencers, like as much as, yeah, I used to look up to them when I was younger, looking at the crazy trades that they're in. But it's a really, really negative thing to be looking at, even if they are in a $1 million profit on a trade, right? It's a very, very negative thing to do, because what you don't understand with a lot of these big influencers, right, is they are just having these big trades to, of course, like flaunt the it's promotion, right? It's big promotion, okay, and that's kind of, if they take a big loss, right, it's fine, right? It's just promotion, okay. They don't really care if they win or lose a trade. They just at some point want to have a big trade that's like over $1 million in a profit, over $5 million in a profit, right? Yeah, and it's a really negative thing, okay, in this industry, right? A really negative thing, because people look at that, people will follow that, people will think they are the best of the best because they have this trade that's in over $1 million in a profit. Okay, right, they have this trade that's over $1 million in a profit, but how many trades have they taken? How much money have they lost to finally get to that trade? That's how I look at it, right? I wouldn't be shocked if his trade was given for free as a marketing tool by the exchange for eyeballing. Yeah, I've never thought of it like that, to be perfectly honest with you. Yeah, I would hope that Bybit wouldn't do that, because I do really respect them as an exchange, because it was on Bybit from what I remember. So yeah, I do really respect Bybit as an exchange, so I hope then they wouldn't be doing it. But yeah, it's all it is a marketing tool. It's just a big marketing tool, right? Yeah, and it's kind of like I to an extent I do understand that I do it myself, right? But I'm doing that mainly to be transparent, right? I share my trades, but it's not like I'm sharing trades that are $500,000 in a loss, or $500,000 or $1 million in a profit. Why? Because I'm not at I'm not at that stage in my life. Will I ever get there? I don't know, right? I'm comfortable with what I make from trading now, okay, and I don't need to over leverage myself and overexpose myself. Of course, I could put a lot more money into these trades and probably make a lot more money than I do. But then it's going back to, right, I'm just throwing my risk management out of the window, absolutely throwing it out of the window. And then I think to myself, this is what got me wrecked in the first place. So a loss turns into a big loss when you over leverage, overexpose yourself, okay, and you never know when a loss is coming, right? So I could pull out however much Bitcoin from my HODL portfolio, put it into my trading portfolio, enter into a short trade here. It could be a loss, right? And that loss would have a huge negative effect on me. Why? Because that is my life savings for the future, for 5-10 years down the future. Okay, so I'm over leveraging myself. I'm putting myself in a very I like putting myself, to be honest with you, in uncomfortable positions, but I'm putting myself in an uncomfortable position where there is no turning back from it. Okay, whereas like now, I'm someone who likes to put myself in uncomfortable positions. Like I like going to the gym. I like having cold showers. I like trading. Okay, and all of those things, right, put me in an uncomfortable position. Trading is a very uncomfortable position to be in, but I like to kind of like hone that, I like to be in that position. I'm sure every single person watching this, if you have entered into a trade, your heartbeat, okay, has probably increased quite a lot when you enter into a trade. Okay, it's probably increased quite a lot after entering into a trade, or when you're just about to enter into a trade. Okay, and you have to enjoy that feeling. You have to enjoy that feeling. Otherwise, and you have to be able to like hone that feeling as well. Okay, you own it and you hone it, right? Because otherwise, you're not going to take that trade, right? You need to be able to put yourself in that position. And this is why a lot of people miss trades. Okay, not right. Again, going back to my miss trade here because I was asleep. Not in that sense, right? But in the sense of people miss trades. They see the trade, they don't take it. Why? Because the heart rate increases. They hands start to get clammy. All of these things, right? and they get very, very nervous, and then they never end up taking the trade. Okay, but you have to. I should I should probably do a whole video dedicated to this, because I know that nobody has ever talked about this. Maybe they have, I don't know. But you have to be able to enjoy putting yourselves in difficult positions. You have to, because otherwise, yeah, my heartbeat increases like sweat mode, but I love it. Yeah, you have to love it. You have to be comfortable being uncomfortable. I trust myself as my plan works long term. Yeah, exactly. Yeah, exactly. That's how you have to think about it, and you have to be comfortable in an uncomfortable situation. That's trading. Okay, and if you're already someone who likes to put themselves into uncomfortable positions, just for example, things that I like to do, cold showers and going to the gym, right? It's an uncomfortable position. It's not necessarily something you want to do, but if you do it, right, it just makes it easier for yourselves. And at the same time, okay, you're then training yourself to be uncomfortable. You're training yourself to be comfortable in an uncomfortable scenario. Okay, I don't want to go to the gym every day. Some days I'm like, I don't want to turn into a fitness influencer here, but yeah, it's like you don't want to do it, right? You don't want to do it. But then once you get there and you start doing it, okay, you then become comfortable in a situation where you were uncomfortable to get into it, right? And it's the same with trading, right? The thought of getting into a trade is very uncomfortable. It is, and even like till this day, like sometimes I still get it where I feel a little bit uncomfortable entering into a trade. It's like, and it's just like a voice in the back of my mind that's saying, "You're putting this much money on the line. Do you really want to put this much money on the line?" But then it's like, once you get into that position, okay, and okay, maybe your heart's beating, maybe your palms are sweating, but you bring yourself back down, okay? You remind yourself why you're doing this, why you've put yourself in this uncomfortable position, okay? No risk, no reward, okay? And you understand that the probabilities are in your favor, okay? Cold showers, legend. I do that most days. Yeah, it's something that I've done for not a huge amount of time. Quite a few months now, but it's just, again, it's like, it's being able to put yourself in an uncomfortable position. It's just an example, right? Put yourself in an uncomfortable position and train yourself to be comfortable in an uncomfortable position. I think that's a big thing that people do not talk about within trading, because trading is a very uncomfortable position to be in. It is very uncomfortable, right? Even if your risk management is in check and your strategy, is good, you still put yourself in an uncomfortable position, right? It's not a natural thing, okay, it's like betting as well, right? It's not a natural thing to put money above a fire pit, okay, with like a trap door, okay, and if something happens, you get double, or if something doesn't happen, that trap door opens and the money drops into the fire, right? That's always going to be an uncomfortable position to be in, right? Why? Because the world is run by money. The world is money. That's unfortunately, that's what it is. Okay, not for everybody, but for the majority of the population, at least like 80% of the population. People don't backtest or build stats. That's why they get nervous. Just look at the now. Yeah, exactly. Yeah, people don't build stats. They will watch a singular video, and they will think, oh, this strategy is going to make me profitable. I'm going to do this, and they don't backtest it. They just do what they're being told to do, pretty much. And backtesting is very, very important. Very important. Even like the things that I talk about, I'd say go and backtest it yourself, because as much as I be transparent as possible here, what is why should you believe me? Why should you believe anybody, right? go and do it for yourself as well. Back test it for yourself as well. And it's not necessarily to it's more to like train your mind about it, to like train your mind for what you're looking for. That's, of course, yeah, it's to see if it actually works in a long period of time as well. But at the same time, whilst you're doing that, you're also training your mind, right? You're training your mind with these patterns, because that's all they are. They're patterns that all align, and the probabilities are in your favor. What happening today, rather, what happened months ago or weeks, and test and test again. Yeah, literally test and test and test and test and test again. Yeah, to be honest with you, I do back test still. I probably don't do as much as I should. But the reason why, I don't really do much back testing now is because what I have works. So it's like, okay, if I see, for example, it's like what I've been looking at recently is the low, okay, for a higher low, for that to be taken out here for a move up, right? This is what's been playing out quite a lot of the time. And it's not actually something that I really used to look at. Okay. But recently, over the past at least 3 months, I have been, going back in the charts every now and then and just looking at how many times has this actually played out. Okay. You can kind of see a bigger example of it here. You've got a high, you've got a lower high. Okay. You've taken out the lower high for the short trade. Okay, this is something that you actually see quite a lot, and it only I literally came to terms with this on this channel with you guys. It's something like this is something that I've learned, okay, whilst doing this channel. This is something that you guys have visually watched me see, okay, find a new trend, okay, and it's something that this is what I've been back testing recently. But other than that, I don't really do much back testing because I know what I have already is good. And of course, I'm trading it. So it's like, I'm kind of back testing it as it's happening, if that makes sense. I'm doing it as it's happening. But yeah, back testing is always a very important thing if you have not done it already. Once you've done it, okay, you don't really have to do it again unless you're looking at new patterns. Okay, it's always something to back test if you're looking at new things. But yeah, I've just realized we've been live for a little bit over an hour, so I think I will leave that there. It is it's 9:30 here in the UK. I can see we've got 5 likes on the video. Thank you very much, everybody, for that. So yeah, I will of course leave that there. I hope you have enjoyed. I know I've probably waffled on quite a lot, but I think it's important stuff that I'm waffling on about. So yeah, I hope you found some interest from it. Of course, like Damien said at the start, all the good stuff is all the magic is of course in the Discord. So if you do want access to that, it is the first link in the description. Second link is of course that free Discord. But yeah, again, if you haven't already, please smash that thumbs up button, subscribe if you are new, and yeah, I hope you guys have a lovely rest of your day. For me, it is just patience, right? It's literally just patience. $65,000, that's kind of what I'm looking for, and then from there I'm going to reevaluate, look at the order flow. Are we lining up for a short trade here? If we are, I will take the short trade. If not, okay, we look for higher prices, and I kind of be looking for like 70, close to, yeah, let's say, yeah, 69,500 to $71,000 is kind of where I'd be looking for if we did not get the short trade up here. Okay, I'd kind of be looking for up there, where we could get a short trade from there possibly. So yeah, it's all about remaining patient, waiting for the level, and then do the analysis at the level. What's the order flow doing, all of that stuff. So yeah, thank you very much, everybody, for watching. Damien, always good to see you back, my friend. Legend, thanks, pal. Stay safe and trade the plan. Exactly. Mr. FFS, what a nightmare. Good to see you here, my friend. A new face that I saw in the woods. Okay. In the woods, yeah, good to see you here, my friend. I don't think I've seen you here before, so it's nice to see new faces. And like Damien says, hit that like button. So yeah, I will leave that there. Thank you ever so much for watching, guys. Take care and see you tomorrow. Well, tomorrow is Friday. Yeah, so I'll see you tomorrow. Take care. Goodbye.
Take me home.